Hello, I am James. I'm from the Vesper Group, and today I am joined with Steve at Leap Accounts, and we're going to answer some of your questions in regards to accounting and tax. Steve, would you like to introduce yourself?
Sure. Yeah, I'm Steve. I'm the managing director of Leap Accounts and Outsourcing. We're an accounting firm that help clients, businesses, and individuals with a wide range of kind of services. One of which being kind of assistance with property, particularly for non-resident landlords, people who kind of might not be aware of what their obligations are with HMRC.
Fantastic. So, one of the questions we have is there's a lot of landlords that are contacting us and saying, do you think it's a good idea to move our rental property into a UK limited, entity as such? And we're seeing, more and more of this over kind of the last couple of years. And I just wondered what kind of your thoughts were on, the pros and cons, should we say, of the property moving over to a UK limited company, and why people are asking us that question.
Sure. So I think the very first kind of overarching thing I'd say on that is it always depends. There's a lot of factors at play in kind of the benefits and drawbacks of moving to a limited company. So I guess the first thing I'd say is do your research before doing that, because as soon as you've done it, you kind of own a limited company and there are certain obligations. To me, the biggest benefits are if you don't have your property in a limited company and you've got a mortgage on it, the tax deduction you can now get on that interest, if you're a higher rate taxpayer, is reduced, and that can be quite untax efficient. Whereas in a limited company, any kind of mortgage interest that you're incurring, you can offset that against all of your rental income. So I guess the first thing I would highlight is if you have a very large mortgage on your properties, then it can become worthwhile to get a limited company because it gets you that benefit. Secondly, a lot of the tax you're paying when you have a limited company with property is to actually withdraw the cash from the limited company. So therefore, if your plan is to kind of buy a property and then when that rental income starts coming in, maybe buy another property and keep building up a portfolio, it can then be beneficial to have that all in a limited company because you're not paying any tax on when the withdrawal. Whereas even if you wanted to do that as an individual, you're going to be taxed on everything straight away. So that can be the two benefits. For me, the drawbacks are simply one, it's more of an administrative burden to have a limited company. You have to file accounts, you have to file a corporation tax return. The stamp duty benefits, I think, are one of the things that people that often draws them is the assumption that they can reduce their stamp duty, but actually the tax rules are kind of largely aligned between companies and individuals. So actually there's not too much benefit there. So yeah, I guess I'd say I normally only advise on a limited company in instances where either they've got very high mortgage payments and they're a high rate taxpayer, or they want to develop a portfolio.
Okay, fantastic. That's a great answer. Thank you very much for that, Steve. And we're going to do a few more videos just like this one. So stay tuned and see you on the next lot of videos.